Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, where we look at what happened in the markets during the last week and how we can plan for a better trade tomorrow. And this is for December 13th, Monday, the week starting from that, 2021. So, without wasting much time, let's get into and see the price action, right? So we have the charts here. Yeah, so this is a bullish candle. It's a recovery from the previous low, swing low. In the Banknifty also you can see on the right side, this is swing low, recovery up move, bullish candle on both are wide range. So that's 1.8% of recovery that happened. Previous close from there, and it is a long week also. You can see that, right? That shows the bull presence in that zone where it bounced from, right? Which is 16,800, 16,700, that levels, right? So Bank Nifty has 2.5% of up more from the previous week's close, right? That's also a green bullish candle. So daily, what is happening, right? So daily, Friday it closed with a hammer kind of pattern on the Nifty, and here you can see it's an indecisive dragonfly kind of pattern that you can see. But you can see that there is a good gap out here, right below the 3 days before candle, right? So this is a good gap up that has happened. So that gap up can act as a very good support. And you can see that in the support and resistance slide side, Bollinger Bands is expanded down, as we note, had climbed above the 20 moving median of the Bollinger Bands on both Nifty, but the close is not that fantastic on in Bank Nifty, but Nifty seems to have closed well above the Bollinger, which is bullish. But the main thing not that is here, you can the lower bands are turned sideways on both indices, which is indicating that there is a consolidation that may be ahead. At least the crash or a correction that was heavy that had happened the previous week may have paused for some time being, is what the Bollinger Band is indicating. But definitely the range, look at the distance from the median to the upper band, distance from the median to the lower band, it's huge. That means high volatility is still there, which is something that you have to keep in mind. Let's get into and see the support and resistance levels. This is what the support resistances are at, right? So 23% retracement level where it has got stuck, last 2 days, right? That's Nifty that you're talking about, right? And it has also bounced from a support, just taken a support in the 17,350 through 17,400 that zone, and then resistance at 17,500, 17,600, that's one. Above that you have the next resistance 17,800 and 850 zone, which is again another previous swing low and resistance area. Above that you have the 18,000 psychological rounding number, right? Downside, this gap is going to help a lot. What you see between 17,300, 350, that zone is going to be a very good support, right? Which it's not, it's little difficult to break that down, right? So that will hold good, and that in case it breaks, it comes to 17,200, 300, and that again breaks, we have the 17,000 rounding number, which is a good swing low, and then you have the 16,700 level, which is a very good support downside. That's downside. And upside on the Nifty Bank Nifty. Similarly, Bank Nifty, here you can see that right now it's consolidating last 3 days in the range of 36,900 to 37,100. So rounding number 37 nearby range is where it is consolidating last 3 days, right? So there is support around there. If that is broken, you have 36,300 to 36,600 as a Fibonacci 50 retracement level. If that breaks, we have 35,600 to 35,900, 36,000 kind of levels is what previous one swing, and below that you have 35,000 swing low. So these are good supports on the downside. But the main thing is there is a gap support here between this large candle where it break out and gapped up. So that gap is going to be good support. 37 is going to be good support. On the upside, if the first resistance at 37,400 is taken out, means 37,800, 700, that range is going to be good. And after that you have 38,000 is a rounding number, it's at 23 retracement. So that's going to be good resistance that could clearly indicate that the lower low pattern that has been forming is clearly taken out once you break above this 37,800, 38,000 kind of range. Similarly, Bank Nifty, this lower high, lower low that is found would be decisively broken if it is closing above this 17,500 and 600, that zone. If it closes above that, you can say that probably the correction is over and an up movement resume. So this is what there is mentioned in the chart forms, right? 350, 400 first support, 200, 17, 200, 300 next support, 17,000 next support, upside 17,500, 650, 8, 17,800, 17,950. Right, similarly 36,900, 37,000 is going to be the gap support, downside support. If that goes 36, 300, 600 is Fibonacci 50. Then if that goes, then you have 35, 900, upside 37, 400, 37, 800, 38,000. Right, that's a support resistance level that has to be kept in mind, right, for us to decide on where the entries has to be, where the exits has to be made. Now coming to the momentum and the trend analysis, you can see that its momentum is sideways on the daily and the sideways on the weekly, also on the Nifty. Banknifty also that sideways both medium term and short term. But it is bullish on the long term, which is the monthly, on both the indices. Right. Now one thing to note is that you can, so this is the momentum on the daily. Of course it's sideways, sideways. Right here you have Banknifty, here you have Nifty. So that's the momentum sideways, and divergence is something that we have to make a note. It's a monthly divergence, which is bullish reverse divergence. That is, price is moving up while the momentum is coming down, right? And it is kind of confirmed because it started the up move. So the target could be the previous all-time high. Remember that it is a monthly divergence, not a weekly or daily. So for a month to move, it takes a lot. It takes one full month, right? So it should be very slow, but there is a divergence that is present in both the indices, the Nifty and the Banknifty both, right, which is bullish. Trend wise, ADX indicator is showing that there is a crossover that has happened, which is a good thing. The trend has now changed on North Nifty and Nifty on the short term, which you can clearly see that the strength has crossed over, the bearishness is reduced on both. Now, for the weekly time frame, the medium term, you can see that the trend indicator is showing that it is still bearish on the medium term, both indices, but the bearishness is reduced. Coming to the open interest analysis, open interest on the futures showing it's a long build up on the Bank Nifty, while it is a long unwind, it's kind of bearish on the Nifty. Now December 16th expiry, the open interest data it's showing that 18,000 is where the highest put rating is. Then comes 17,500. On the upside, 17,400 is where the highest call rating is, and then you have 17,200 which is for the maximum put rating. Right? Sorry, 17,400 is having the maximum put rating, not call. Then it's basically the support is between 17,200 and 17,400, and the resistance is going between 17,500 and 18,000. So it's matching with what the charts are saying. Open interest basically. Similarly, Bank Nifty, 38,000 and 37,000 is where the maximum resistance is seen, where call ratings is seen, and 37,000 and 36 is where the supports are seen. 0.89 and 1.01 on Bank Nifty and Nifty seems to be kind of bullish, not bearish anyway, on the put call ratio. India VIX volatility has cooled off 20% last week. That's from where is 21 where it has broken out of the 20 range, and now it is 16. So it's a 20% dip that has happened last week. And implied volatility is 15.36, and which is below the 20.7 of historical volatility. That also has dipped a lot, and IBP is also dipped to 38%. So what basically volatility has cooled off, but it is still maintaining the 15 to 20 range, right? So it probably is dipping. It may take support and again near to the 14, near to the 15 range, and then again mean toward upside. So we have to be cautious that there is a potential that the volatility reversal strategies where you benefit. Option buying premiums can shoot up. Option selling may flop unless you have a positive strategies taken. All this has to be kept in mind when you're trading options based on the volatility strategies. Open is what we discussed about earlier is seen, right? Overall is dominating bearishness, dominating the resistance. Having the highest call rating is dominating, we can see in both, but good supports at their downside, right? 17,500 and 550 seems to be a very good zone where the straddles are being placed on both, on the Nifty basically. Similarly, 37,000 is also a critical point, whether it holds next week or not for the expiry of 16th December. Sectoral watch, if you see IT sector is flat, right? Indecisive dodge is what you see. The momentum is again flat or sideways, so you'll have to wait. FMCG is 2% up, so almost all sectors are up, right? Auto sector 3% up, metal 5% up, FMCG 2% up, right? Almost flat. Pharma is also flat. This is indecisive. Reality is 4.5%. That's most bullish. So all of these sectors are weekly and the monthly, weekly and the daily, the short term and the medium. Both of them have got bullishness on the sideways one as per the RSI. Except reality where the weekly is bullish. Right? So reality just have to wait for a moment to catch up on a daily time frame. We can pick up stocks from that. Institutional participation, if you see last week, Fyers sold 9,200 crores and DI bought 7,200 crores. So the relentless selling from the Fyers continued last week also. Probably it comes to an end because next week is going to be vacation time for the institutions in the foreign countries. Domestic institutions, relentlessly buying, had been buying. You can see green all over the entire last, several months. They have been continuously buying, and see the red sea of the FIS on the chart, right? So that's a little worrying, right? Yeah, global markets. If you see, US markets are all recovered from the Omicron, dip that had happened, and 4% of recovery has happened on almost all of the US market indices like Nasdaq, S&P, and Dow Jones, and all of that. Right? They're all bullish now. Big bullish candles, wide range, and dollar index is kind of indecisive and consolidating after it has broke out from the two major resistance zones. Right? You can see that down here. Right? But USDINR has shot up 0.6%, which is worrying for us. Indian economy 75.7 is rupee. Right? Currency pair rate, which is breaking out of a major resistance zone. So if it can go up to 76 if it goes like this, unless there is an intervention that happens from the central banks. Momentum is also good and trend is also great. So it seems like rupee can further weaken from here as per the charts. Right? Last week was also a breakout move that has happened from the resistance zone, as you can see. Now crude oil 8.5% of up move happened after it made a historic dip of below 65 kind of levels. Which is okay as long as it does not go and hit back to the 75, 70, 80 kind of levels, right? As long as it consolidates around this, it's fine. But, more than 8% of up move has happened for the last week is what crude oil is showing, charts are showing. Gold is consolidating at the same, major supports on where it has been forming the handle part of the cup and handle. Overall, it's bullish, but last week again, it's consolidation mode at a major support zone. As long as it doesn't break down this and go down, it should be okay. Topics rounding back on beta idea. These are positional and swing trades. This is a cup and handle formation that is happening. A breakout happened and it has retraced, and this seems to, and then it has bounced from here. It's a change in polarity also on the weekly, where previous resistance seen as a support and the bounce has happened. This is very very bullish indications. Volumes are very good, momentum is good, trend is good. So on the weekly basis, it gives an indication that this could be a good trade on the positional play. C entertainment seal, a box pattern breakout as indicated in earlier last week, one of the days. The stock seems to be broken out and then again broken out further from the previous major resistance zone, and it's also having a rounding pattern that good momentum, trend, and volumes. Right. So there is high chance that this can further give good up moves. Right, C entertainment and bottom, two picks, both long side. Now this is the entire play for the Nifty. You can see that's a double diagonal calendar spread with a very good probability of profit and the risk reward. Risk reward is reasonable, but probability of profit is good, and the range is also very good with a reasonable max profit also. Look at the capital that is required there, right? It's almost neutral, you can say. 1.25 minus 1.25% delta. So it should work out good if in case the Vega, the volatility is increasing, it's going to hit 10-15 and then again bouncing back towards 20 minutes, it can benefit from the Vega. It's a weekly strategy for the next expiry of 16th, and this is something that can be tried out. Market this week recovered from the bearishness, right? And we have seen that a very good recovery has happened after the 10% dip on the Nifty. So Overall buy is mild bullish. Mild because it's at a very critical point where the lower high, lower low is about to get breached. And the recovery, the consolidation is likely to happen than a crash, and so that gives a hope that overall we can. It's time that we can be mildly mildly bullish. That's what my view is. VIX also has cooled up 16 level. It's good. The selling might from the institutions may ease out now by the Christmas time. Right, but always, make it a practice use vertical spreads instead of naked spreads, because markets can, do whatever it likes. It can, take us all for a ride and then again go and correct. So always take vertical if you're playing options, vertical spreads. Counter spreads can work because of the Vega level where we are at the bottom of the range, so it can give benefits. Yeah, once again, this may be the last chance for the long-term investing if you're planning to put in some money on and make it for option trading, collateral or something like that. This may be the time to invest, because if the market shoots up beyond to the 18,000 level, it may become again expensive. So this may be a chance to invest, to put in some money for long-term investment as well, right? Because we have seen that we had a big ride and a decent correction, and now we are consolidating. So three different phases in every last several weeks has happened, right? So this is the best way to understand and adopt your strategies accordingly, right? Using different position sizing techniques and diversification techniques, right? And applying different strategies in different time cycles, different market cycles, right? That will help us to not to lose much and then stay in the game and also meet our goals, financial goals, right? So that's just wrap up of what I have, my view for the next week, based on all the points that we had gone through, all the different indicators, the trend, the momentum, the price action, the volatility, the open interest, right? The global markets, the commodity markets. So as a culmination of all of this, I have come to a view. That need not be your view. You have to form your own view. Right? But if my view or my reasoning behind that is going to help you some way to frame your view and frame your trade plan for the next day, then you can consider hitting the like button and share it to friends and colleagues. Thank you so much for watching. Happy trading, happy learning. Bye.